Hey there, everyone. Dave Keller here with Market Misbehavior, back with our latest Choose Your Own Adventure style video for the Nasdaq 100. What we'll do today is lay out 4 potential future paths for the Nasdaq 100 ETF, the QQQ, over the next 6 to 8 weeks from a super bullish scenario where the uptrend resumes and moves onward and ever upward to a super bearish scenario where we retest some recent lows and test the 200-day moving average, if not worse. With the market selling off here the first week in June, a lot of investors starting to think about those bearish scenarios. So here we'll force you to think about 4 different potential outcomes. The point of this video is to really force yourself out of your preconceived biases. If you're bullish, to force yourself to think about some downside scenarios. If you're all bearish, to remember that there is an optimistic point of view that may have merit, and just to help us think about some different probabilities before we get surprised by what happens tomorrow. Before we get there, I do want to share with you the chart that we featured in mid-April. We actually did this Choose Your Own Adventure style video in mid-April. This was the chart that we featured, laying a very bullish scenario, scenario number 1, where the S&P got up to around 7,400 by early June. And if you look, today, here on Friday, June 5th, we exactly hit the tip of that green arrow. So scenario number 1, if that's where you voted last time, you were spot on here. And what we talked about in that last video was that super bullish scenario would mean the initial rally off of the March low would have to continue. Could not see a scenario where the aggressive pace would hold. So we sort of thought about the most optimistic scenario being a little gentler slope, but still quite a bit of appreciation led by the growthiest of growth. That's basically how the month of May played out into early June, scenario number 1. These other scenarios, while we did not retest S&P 6300 or something like that, I think what's important about this is by thinking about those different scenarios, we were much better prepared to recognize all the signs that played out to really make scenario number 1, that super bullish scenario, come to fruition. So if you picked the scenario number 1 last time, congratulations, spot on. And I hope you found that it was time well spent to think about those probabilities. Next, we're going to look at the chart of the Nasdaq 100 and talk about 4 scenarios, the super bullish to the super bearish. Here's the chart and those 4 scenarios. So as a reminder, here's what we're going to do. We'll lay out the 4 scenarios. Please watch all 4 and then use the comment section on our YouTube channel. Make a vote. Which of these 4 scenarios do you see as most likely and why? Now, you may be tempted to give me some answer like 1.5, like halfway between 1 and 2. That is a violation. You have to pick one. Stand by your analysis, stand by your thesis, make the argument, and then once you've voted and explained your justification, take some time to read some of the other comments. That is where you can really open up your mind to bullish and bearish, theses and discussions and opportunities. All right. Scenario number 1, the super bullish scenario. We've had a bit of a sell-off this week, as you've probably noticed, and here on Friday, June 5th, we're having a big risk-off move as the jobs data came out a lot stronger than expected, as technology stocks are going into a big-time risk-off mode. The XLK is down about 5% plus as we record this video, but some of the leading names are down a lot more. So this has been one of the biggest down weeks we've seen in technology in recent history. The super bullish scenario would say this is a brief pullback. It's a sudden and severe pullback, but it's just a pullback. It's a brief corrective move. We're going to recover very quickly and continue the uptrend phase. Based on the severity of this pullback, it would have to be quite a reversal to get back to the previous slope. So I would say the most bullish scenario probably puts the Nasdaq 100 around like 780 or so. Sort of mid-late July, so after the 4th of July holiday, give it a couple more weeks. I would say the super bullish scenario kind of getting back to the general vibe that we've seen in April and May. There's no denying. I think no one would disagree that the run that a lot of these growth stocks have had means some pullback is overdue. The super bullish scenario would say the pullback we've seen now to wrap this week is probably going to be about it. When we come back next week, we'll probably see a resumption of the uptrend. We'll see a lot of dip buyers come in once the shock of this week has worn off, and we'll resume that uptrend phase. So scenario number 1 would most likely mean The Magnificent Seven, many of which are pulling back, would have to resume their uptrend. Semiconductors, which are getting dinged pretty good here to end the first trading week of June, would have to resume their uptrends. Dip buyers come in, buy in on the AI move. The SpaceX IPO injects a new enthusiasm for growthy investors. And the uptrend returns, we go onward and ever upward. Scenario number 2 is the mildly bullish scenario. This is more of a measured advance. This might mean that, look, the sell-off that we're seeing this week, which is very growth-oriented, is pretty painful for technology, but healthcare stocks having pretty good weeks. Financials doing pretty well. Other sectors like consumer staples and some industrials and others are actually doing okay. And so this is more of a rotation, and this initial shock that we're seeing on the Nasdaq 100 and the S&P 500 and others is just a rotation away from leadership, away from, semiconductors versus everything else, and more into a broader advance driven by some value-oriented sectors. Now, if that's what happens, the Nasdaq 100, which is much more growth-oriented, probably has no chance of regaining that early June high. So I would say this mildly bullish scenario, which means the S&P probably outperforms the Nasdaq and the Dow probably outperforms the S&P, that would be scenario number 2. So in scenario number 2, I would say we don't get above the high that we established on Wednesday of this week, but the drop is short-lived. We recover pretty quickly. And even if we pull back even further, maybe all the way to the 50-day moving average, there's enough of a recovery in June and July to get us back to that, get us back to the end of point number 2 by the 3rd week in July. So that's scenario number 2, the mildly bullish scenario. We're going to get to scenario 3 and 4 here in a moment because the bearish scenarios are always a lot of fun. But before we do so, I do want to give a shout out to one of our partners, Seeking Alpha. They have a product called Alpha Picks, where their quant team uses their quant model, which I've reviewed and I think is very well designed. They use that quant model and then hand select 2 stocks every month to dig into a little deeper into the fundamentals, into the technicals, into how we can use a quantitative scanning process and a model-based process, but also dig in to the micro level to individual stocks and opportunities. That Alpha Picks group of stocks has outperformed the S&P pretty resoundingly here in 2026. Past performance is never a guarantee of future results, but it's a pretty powerful, simple, systematic way to follow a rules-based approach to stock selection, but with full transparency into the process behind the picks. If you want more information, go to marketmisbehavior.com/alphapicks to check out more about it. You can actually they have 2 picks queued up for June, so you can probably see the first one and then also review all of the recent picks for May and April and before. All right, scenario number 3 is the mildly bearish scenario. So this is where this technology sell-off continues, right? And we probably see more of a pullback in semiconductors, I would say, and other growthy sectors. I would say scenario number 3, interest rates probably start to go up, stocks and bonds start to sell off, and the higher rate environment, which is something that we're really feeling now here at the beginning of June, right? We're seeing the market pricing in some potential rate hikes toward the end of the year, maybe 1 or 2 of those. The stronger jobs data kind of suggests that that's a more likely outcome. And as a result, higher rates just basically mean growth stocks, so their future earnings are less valuable today. Because the way you kind of value future earnings, if you kind of go to fundamental valuation school, you get your CFA and study that, you learn that interest rates are a big part of that component, right? Because the way you value future earnings is what is the interest rate environment. So if interest rates are higher, those future earnings are less valuable. This market has been driven higher by the expectations of future earnings growth by some of the growthiest companies. And if those future earnings are less valuable today, then the Nasdaq 100 is going to start to sell off. I would say scenario number 3, we test that 38.2% level, which is right around 675 on the QQQ. If you give it about 6 to 7 weeks from now, that probably puts us right around the 200-day moving average. So I would say mildly bearish scenario number 3, this initial sell-off maybe lightens up a little bit, but there's still a big rotation from growth to value. There's probably higher rates, more of a risk-off feel to the markets. And toward the end of July, we're talking about whether the Nasdaq 100 can hold that 200-day moving average going through the end of Q3. All right, got to have a doomsday scenario. Our scenario number 4, the very bearish scenario, the super bearish scenario, means today's sell-off, this sell-off on Friday, June 5th, is just the beginning. We continue to drop, and maybe this is just the first wave of multi-legs downwards as we continue to depreciate in terms of growth stocks. This would be a much bigger rotation, not just from growth into value, but from growth into more defensive sectors. In this scenario, I would expect utilities, definitely real estate, which is starting to improve a bit. The relative performance in things like real estate, consumer staples, and those kind of sectors really start to improve and take the place of technology, which has been so dominant in 2026. Our doomsday scenario, our scenario number 4, takes us to around 630 by mid to late July. That would be a 61.8% retracement of the March to June rally. That would take us back to the range of the October 25 and January 26 highs. That would be basically giving back that entire breakout in April and May, kind of retracing all the way back down. That would take us most likely below the 200-day moving average. And by the end of June, we're asking whether this is just the beginning and whether the Nasdaq 100 is going to have even more weakness. What's interesting is scenario 3 and definitely scenario 4 would be following kind of the classical seasonal pattern. So if you're big into seasonality, scenario 3 or 4 might make a ton of sense because May through October is the weaker 6 months of the year. May and June generally have been very weak in a midterm election year. So a big sell-off like scenario number 4 would be a classic seasonal pattern for 2026, similar to what we've seen in similar midterm election years. All right, there we go. Those are the 4 scenarios. To review, scenario 1, the super bullish scenario. This pullback we've experienced this week is just a brief hiccup. It is an opportunity for dip buyers to come in. The SpaceX IPO injects a bunch of optimism next week. Dip buyers come in. The Nasdaq 100 makes new all-time highs and just continues onward and ever upward as we get up toward 800 by the end of July. Scenario number 2, the mildly bullish scenario. We have a bit of a pullback here going in early June, but enough buyers come in that the downside is limited. We don't regain those early June highs, but we get back up in that range over the next 6 to 8 weeks. The mildly bearish scenario, scenario number 3, means we have about a 38.2% retracement of the Q2 rally. It's not enough to break the 200-day, but we get down into that range as value sectors definitely outperform the growthy stuff. Scenario number 4, our very bearish scenario. This week is just the beginning. We go full risk off. The SpaceX IPO has issues. There's not a lot of enthusiasm as was initially expected. Maybe just there's been enough of a run in these growthy stocks that there's enough downside to be had in the Nasdaq 100. We get down to around 630 on the QQQ. That's about a 61.8% retracement. And then we're starting to question where buyers are ever going to emerge. Which of those scenarios do you see as most likely and why? Make sure you drop a comment below and let me know your vote along with your reasoning. After you've done that, and only after, take a glance at some of the other comments, right? One of the real benefits of this exercise is to open your mind away from your own thesis to consider others. That sort of bull-bear debate, what we call probabilistic analysis, is something I learned to really appreciate earlier in my career, and I still love doing it today, and I appreciate you guys joining into this Choose Your Own Adventure style discussion today. For Market Misbehavior, I'm Dave Keller. Have a great one, and remember, it's always a good time to own good charts. Take care, folks.